The Neo Inc. I shared with you is now up 9% and making subscribers serious money. But today's stock is different. This isn't a penny stock. This is a $200 billion biotech giant with a weight loss drug pipeline that could be the next blockbuster in an industry worth hundreds of billions. Stick around, because this one's for investors who want stability and upside. Welcome back to Velocity Stocks. I'm Sterling, and I hope you're enjoying my best stock picks. If you're new here, this channel breaks down real opportunities, from high-risk penny stocks to established giants trading at a discount. Hit that subscribe button and turn on notifications, because today's stock combines the stability of a Fortune 500 company with a genuine growth catalyst most investors haven't priced in yet. Let's get into it. Biotechnology right now is in the middle of one of its biggest growth stories in decades, the obesity and weight loss drug boom. This market is projected to be worth hundreds of billions of dollars globally within the next decade. Companies like Eli Lilly and Novo Nordisk have already shown the world what a successful GLP-1 drug can do to a stock price. But here's what most people miss. This is not a two-horse race anymore. Established biotech giants with deep pipelines, existing commercial infrastructure, and massive R&D budgets are racing to capture their share of this market. And one of the largest, most established players in this space is quietly advancing a weight loss drug that early trial data suggests could compete directly with the current market leaders, with the added advantage of significantly less frequent dosing. That's the setup for today's stock. Today, we're looking at Amgen stock, ticker AMGN. Amgen is one of the largest independent biopharmaceutical companies in the world. They discover, develop, and commercialize human therapeutics across oncology, cardiovascular disease, bone health, inflammation, and nephrology. Headquartered in Thousand Oaks, California, Amgen was founded in 1980 and has grown into a company with over 31,500 employees worldwide. The stock trades on the NASDAQ. This isn't a startup. This is a company with decades of commercial execution behind it. Let's break down why Amgen deserves your attention right now. Catalyst number 1. MariTide, the obesity pipeline. This is the big one. Amgen has 9 global Phase 3 studies underway for MariTide, targeting obesity, type 2 diabetes, and related cardiometabolic conditions. In Phase 2 data, MariTide showed up to roughly 20% average weight loss at 52 weeks in people without type 2 diabetes, with no weight loss plateau observed. That's a critical detail because plateauing has been a limitation for some existing drugs on the market. Catalyst number 2. Monthly dosing advantage. Amgen has emphasized MariTide's less frequent dosing schedule, potentially monthly or longer. If that profile holds up in Phase 3, it could be a meaningful differentiator for patient adherence compared to weekly injections. Catalyst number 3. Revenue growth. Amgen reported $36.8 billion in revenue in 2025, up 10% year over year. That's real, growing revenue, not a pre-revenue speculative story. Catalyst number 4. Diversified portfolio cushions the transition. While legacy products like Enbrel and Prolia face patent pressure and biosimilar competition, Amgen's broader portfolio, Repatha for cardiovascular disease, oncology drugs like Blincyto and Kyprolis, and its growing biosimilar business helps offset that decline while MariTide scales. Catalyst number 5. Institutional analyst backing. Analysts from firms including JPMorgan, BofA Securities, and Morgan Stanley have pointed to the obesity pipeline as a key growth driver, with Morgan Stanley raising its price target as pipeline data developed. Catalyst number 6. Price action near highs. The stock recently traded near its all-time high of $390, set in February 2026, showing the market is already starting to price in some of this optimism, while still leaving room to run if MariTide's Phase 3 data confirms the Phase 2 results. Now let's look at the numbers. Current price, $367. Market cap, approximately $198 billion. For context, this is a mega-cap biotech, not a speculative small-cap play. You're not betting on survival here, you're betting on growth acceleration. Average volume? About 3 million shares daily. That's solid, healthy liquidity. You can get in and out of this position without worrying about slippage, unlike a lot of the small-cap names we cover on this channel. All-time high, $390, set in February 2026. At $367, the stock is trading just under 6% off its all-time high. This is not a beaten-down turnaround story. This is a company trading near its peak valuation with a legitimate case for further upside if the pipeline delivers. Let's look at the ranges. Over the past month, the stock has traded between $335 and $375. Over 6 months, between $320 and $390. Over the past year, between $270 and $388, meaning AMGN has climbed significantly off its yearly low. And over 5 years, the range has been $200 to $390, showing this stock has nearly doubled off its 5-year low. This is a steady uptrend, not a volatile penny stock chart. The pattern here reflects growing institutional confidence as MariTide's data has rolled out. Before you get excited, let's talk about risk, because every investment carries it, even a $200 billion company. This is not financial advice. I am not a financial advisor, and nothing in this video should be treated as a personalized recommendation. Amgen faces real headwinds. Enbrel sales fell significantly in 2025 due to Medicare reform pricing pressure. Xgeva and Prolia face increasing biosimilar competition globally. These are meaningful revenue streams under pressure, and MariTide has not yet completed Phase 3 trials. Phase 2 data does not guarantee Phase 3 success. Clinical trials can and do fail. Even large biotech stocks can see double-digit swings on a single earnings report or a single clinical trial readout. You could lose money on this position even though it's a large, established company. Position sizing still matters here. Never put a position size into any single stock, large or small, that you're not prepared to see decline. Diversification protects you. Do your own research. Read the 10K. Look at Analyst notes. Understand the upcoming Phase 3 readouts before you make any decision. Let's recap. Amgen, ticker AMGN, is a $198 billion biopharmaceutical giant with a growing obesity drug pipeline and MariTide, backed by strong Phase 2 data, 9 ongoing global Phase 3 trials, and a diversified existing product portfolio generating real, growing revenue. Conservative price target. I'd watch for the stock to test and potentially break its all-time high of $390 if MariTide's Phase 3 data continues to track with Phase 2 results. That's roughly 6 to 8% upside from current levels. Aggressive price target. If MariTide's Phase 3 program reads out positively across multiple indications, some analysts see significant re-rating potential beyond the current all-time high, as the market begins to price this in as a genuine blockbuster franchise. If you found this breakdown valuable, subscribe to Velocity Stocks so you don't miss the next one. Drop a comment and let me know, are you watching AMGN's obesity pipeline? Hit that like button, it genuinely helps this channel grow. Do your own research, invest with discipline. Never risk money you can't afford to lose. Next video, I'm covering another stock at a completely different stage, smaller, riskier, and with a very different kind of catalyst. Make sure you're subscribed so you don't miss it. I'm Sterling from Velocity Stocks. Let's catch these stocks in motion.